Hi, everybody. Welcome back to the Thinking Crypto channel. I have a very special guest with me, Ryan Radloff, who's the CEO of Kingdom Trust. Ryan, thank you so much for joining us today.
Great to finally make it, and thanks for having me on.
Ryan, I'm excited to speak to you because we've seen a lot of news around Kingdom Trust and the things you guys are doing with Bitcoin and custody. Before we get to that, tell us about your background, where you're from, where did you grow up?
Yeah, I grew up in the southeast of the U.S. I was born in Atlanta. Grew up in Hilton Head Island. It's an island in South Carolina, and then moved to London back in 2014. And when I was over there in London, I saw that the Winklevosses and the Solidex guys back in the day were trying to get an ETF to market back in the U.S. where I was from. But when I was over there, I noticed that no one was trying to get a Bitcoin ETF in the European markets. So I launched a company called CoinShares, which is now basically the second largest in the world behind Grayscale, GBTC product. And CoinShares lists the Bitcoin exchange traded products on the NASDAQ in Europe. So that's where I really cut my teeth in Bitcoin, was in the market. I think CoinShares now is about 3.5 billion in Bitcoin, approximately, maybe a little bit less now, depending on the volatility. But I stepped down as CEO there, still very close with them, and to move back to the U.S. and go after and help the U.S. retirement market start to protect their savings with Bitcoin. So now I moved back here and started Choice by Kingdom Trust, and Kingdom acquired my company Choice to bring the product to market, what we have now. So I got into Bitcoin and back in London, and then moved back to the U.S. to start this company as well now.
Got it. And how did you first come across Bitcoin or hear about it? And what was your aha moment? Like, wait a minute, this is something big.
Yeah. So I got into Bitcoin in 2012, and I studied macroeconomics when I was at Duke University. And I really got, back in 2008, 2009, if you remember in the financial crisis, my parents, when I was at Duke, they lost everything. I got a phone call from my mom saying, hey, we are foreclosing on our house. And I'm like, wow. And we don't have it. We have nothing. I'm like, what are you talking about? I mean, we grew up, my dad was a football player. He played in the NFL. So, you grew up like under that, not necessarily a impoverished family, because he was an athlete. But I got that call and I was like, what on earth? And she couldn't even explain what happened. And I remember I was like, oh my gosh, I got to study economics. I got to figure out what's happening. And I remember at that moment, and this was pre-Satoshi's paper, obviously, I was so disenfranchised with like how the legacy financial system worked that it took everything from my family. And I, at that point, was like, God, I became an Austrian economist. I'm an Austrian rooted financial thinker. And at the time, Austrian economics, all we really had was gold.
Sure.
And gold is, love gold. I own gold, but gold's got like a very, in order for gold to work, it's like society needs to collapse. And I think that is cool as like a thesis or a hedge, if you will. Yeah. But it's not like exciting. And what I think is like the future, because our future is not analog, it's digital.
Yep.
And when Bitcoin came and I saw this monetary supply where it's like this scarce supply that's controlled and systematic and programmatic, and I saw that it was like a scarce supply curve as opposed to the whatever you call the legacy system, this Keynesian disaster of money printing. It was like a lightning rod went off, and I was like, you know what? I'm dedicating my entire life to advancing this in the market. And that started with exchange traded products in Europe, and now it's retirement accounts in the United States. And who knows what it'll be next? But anything that we can do to advance Bitcoin is the mission.
For sure. And later on, we're going to talk about like the GameStop short squeeze and so forth. But to stay on track with Bitcoin, I'm assuming you have Bitcoin in your portfolio. Is there any other cryptocurrencies that you also hold?
I own so many cryptocurrencies I can't even keep track of, to be honest with you. I mean, I've never really sold any of them. A lot of them are. I have to go check. Honestly, I don't. There's some of them have zero value anymore because I bought all of them. I just buy them all. Back in 2017 and the glory days of ICOs before everything went belly up. But yeah, I'm a big believer in. I'm a big believer in the entire space. I believe Bitcoin's the nucleus and it's the biggest position of my digital portfolio. Actually,
Sure.
my whole portfolio for that matter. And then I do believe that a lot of the most interesting kind of groundbreaking technology is occurring in the outer layer of our space. And it's captured by some of these network coins. And I think that will remain a part of it. You'll see a lot of like the advancement of our decentralized or blockchain-based ecosystem. The work's being done on those outer layers where some of the coins are smaller market caps. They have the ability to try new things.
Sure.
Where Bitcoin, you almost want Bitcoin really, really difficult to change, and you want this outer layer of like venture type, innovative, open source code networks that are driving unique things. And I am a big believer in that diversity. So likewise at Kingdom, we custody, there's 40 plus coins that we approximately that we have right now, and we're going to keep growing that.
That's awesome. So on the note of the custody service that Kingdom provides, it's specifically or catered to institutional investors. Can you talk a bit about the demand you're seeing? And earlier last year, we heard about you're providing custody services to Fidelity. So if you can take us behind the curtain a bit as to how that works overall.
Yeah. So, well, I would change slightly change that description and how you do it. So we have three types of custody solutions. We have custody for institutions, where we safekeep assets like Bitcoin, like Ethereum, down the chain for institutions, where they're using us as a regulated, qualified custodian to safekeep their digital assets. We're insured. We were the first regulated custodian in the world to custody Bitcoin, the first one back in 2015.
Wow.
As a regulated entity, and because of that, companies like Galaxy Digital custody with us. Amon, the exchange traded product company in Europe, custodies with us. Other big institutions, household names that you've heard of, custody with us. That is what we call our institutional custody. And it's growing just like everyone else. But what is growing the fastest is actually our retirement account market. That's through a product called Choice by Kingdom Trust. So Choice is our app that lets people that have a retirement account buy Bitcoin as easy as buying Tesla or any ETF. And the reason why that's growing so much is that crypto holders love to trade. And in a retirement account, you can trade tax deferred until you're old, fat, and gray. And you think about what that means. Like if you're going to hodl or trade for the next 20, 30 years, how much are you going to pay to Uncle Sam every year at the end of the year on taxes? It's a lot, depending on whether it's short-term cap gains or long-term. In a qualified retirement account, you don't have to pay those every year. You literally pay at the end as you withdraw. So these crypto traders, there's 7 million people in the United States. I was one of them. 7 million people that have already bought Bitcoin or Ethereum or one of the others. They've already bought it, and they have some like zombie retirement account, like an IRA or a 401k that is sitting over here, and maybe it's got like 10,000 bucks in it, and you have it sitting in some like zombie Vanguard 30-year fund. All right, and the rest of your life you're stacking sats, you're staking, you're baking, you're doing all of this stuff to accumulate your digital wealth. But most of us aren't even thinking about, wait a second, I can be trading tax deferred over here and hodling tax deferred. And that's why it's booming. So we are out to tell the message. There's 7 million of you. You can be trading in a qualified or retirement account without paying Uncle Sam every year. And that's a big deal. So I'd say that is, believe it or not, that is growing faster than our institutional market is. Even though we've seen all of these hedge fund guys and gals kind of endorse Bitcoin in the back half of last year, us on crypto Twitter and everywhere else, we've been here for a long time. And we're now growing up, and we're starting to think about our wealth. We're starting to think about our, the next 20 years of our wealth planning and how crypto fits into our retirement. It is a part of our lives now. It wasn't just like 6 year, 7 year fad. So what I'm in the business of is not even selling people on on coins. I'm in the business of selling qualified retirement accounts to Bitcoiners and explaining those benefits. I mean, to me, that's like, I'm shocked at how fast that is growing compared to the other parts of our business, quite honestly.
Sure. And the incentive is very strong there, because now I'm thinking about, the cryptos that I swung trade and I cashed out, and the capital gains tax I have to pay come March, and I'm going to get hit big time. So walk me through this. I have a 401k account with Empower Retirement. If I wanted to plug into Trust by Kingdom, Choice by Kingdom Trust, how would I go about doing that? Is it transferring the funds over? Can you walk me through that process?
Oh, so what's happening? So the website's called retirewithchoice.com, and we'll cover that more at the end. But it's a retirement account, and either you can roll over. So in this app, you can buy Tesla, you can buy an ETFs, you can buy Bitcoin, you can buy any of the other coins, and all from one account. And if you have, let's say you have those ETFs or mutual funds in your other accounts, you can either roll them in kind, so you don't have to sell them.
Sure.
You can have them on your dashboard right next to all your other crypto holdings. Or what you can do is you can just send cash and start with the cash that you send. So it's either or. It's called an IRA rollover if you roll it out of one company and into Choice. Or you can create a new Choice account and just contribute to it and have both of them. A lot of our users actually like consolidate. The experience of it is really good. So they like consolidating and having one dashboard and one view. But you can do either. One of them is called a rollover and the other one's just called a contribution. And by the way, so here's the thing. You have 3 options of how you hold your keys. This is a big deal. Because Grayscale is what most people will own in their retirement account. But Grayscale, guess what? Not your keys, not your coin. So you get 3 options with your crypto. Option number 1 is you can lend it out and put it in motion where there's no fees, and you'll be able to very soon start earning interest and yield on those coins. Option 2 is you park it and keep it in air gap cold storage with us. And option 3 is you hold your own keys, and we do the IRS reporting for you, and you can hold your keys yourselves. And if you're a newbie to that, because it's, holding your own keys is the best part of our space, but also very scary, as you know. We've developed strategic relationships with Casa and several of the others where we built this like out of the box solution for you to buy and move to those different mediums. Myself, I have a little bit of all of it. Most of my Bitcoin I hold in my Casa account, and then the rest and myself and hold my own keys, and then I have a little bit in cold storage, and then I'm lending out the rest because there's the capital markets layer in the crypto industry is awesome, and I want to be able to participate in all 3 of those.
Sure. I need to check that out ASAP. I'm going to do that today because obviously the big incentive there is taxes, avoiding the ridiculous taxes. And I know, not to get political, but the current administration, there's talks about going up. So I think you guys are certainly ahead of the curve there. And I love the fact that I can still hold my own private keys because that's a big concern for many folks. And you did mention you guys are insured. So if anything was to happen, there is obviously an insurance policy there, right?
Yeah. Now, one thing though, keep me wrong. The only part, just to be very clear, we are insured with the coins that we are holding and when they're in our environment.
Got it.
When you own your own keys, we can't insure that part.
Sure.
But when they're with us, that part's insured. Yes. So, but we give you the point is giving you the choice is kind of on brand for us. It's like, look, you want the person where it's air gap, air gapped like a third party like us. You want them insured. If it's you probably yourself don't have personal insurance on your Bitcoin. That's really not a market for that. The point is giving you and giving our users the power to do either one. And yeah, I do think the biggest, like I think about like my life, think about all of us back in 2017. Remember when we were all looking at our crypto gains and everyone's high five, and then all of a sudden 2018 collapse, and double whammy, you owe the tax bill on 2017's gains. So then all of a sudden it's like, I mean, a lot of my buddies got out of it. I mean, they got smoked, and I'm sure a lot of your friends did too. I'm sure you traded brilliantly through the whole thing. But that's the biggest point, is that, like, if crypto, our users aren't just here for the short term. They're thinking about long-term wealth.
Right.
How does crypto play into my retirement account? If I'm going to be trading this stuff for the next 10, 20, 30 years, if I'm trading outside of a retirement account, how much over that time am I giving Uncle Sam? How much, especially when cap gains are increasing the way they're about to? They're going up for everyone. So if you have the opportunity to hodl and to trade deferred for 20, 30 years, and you believe in the thesis of where our industry is going,
yep,
that is very material. And that's what I think is the most important thing that I can really do and explain to the 7.1 million of us that already are, and I'm speaking for US only, unfortunately,
right,
but are already in the game, understand these things like the importance of Bitcoin, the importance of Ethereum, the importance of all the other ones, but are starting to think about it from a long-term wealth standpoint, and tax planning standpoint. That's very important. We're all growing up as an industry. It's cool to see.
Yeah, absolutely. And this is such a critical component of it, because there's so much money in retirement accounts. So on that note, I want to ask, even though you may be seen as a competitor to the Vanguards and these folks, are you in contact with them to try to build relationships to, if their respective users or customers want to move their funds over or whatever it may be? Are you in contact with these different folks?
I would say the one that we're in contact with the most is Fidelity, and through the Fidelity Digital Assets team. I mean, we have a very close relationship with them. We're getting thousands of people rolling over their retirement accounts from Fidelity and from Vanguard and from the others. And there's a really short term, to give everyone an understanding. Here's kind of the construct. So there's two buckets. You have the Krakens, the Coinbases, the Geminis, and the big exchanges over here. And then you have Vanguard, TD, Charles Schwab, and Fidelity over here. The Vanguards of the world don't believe in the word Bitcoin and retail put together yet. All right. That will change soon.
Yeah.
Trust me. And then likewise, Coinbase and Kraken don't give you retirement account options yet. That will probably also change very soon. So what you have where this is in the value chain is that we're right in the middle, where we integrate in with Kraken and the other exchanges so you can trade. We then store it for you in one of those three options. But I'm expecting the other guys to offer it soon. I mean, if quite frankly, if I'm doing my job right, I'm shaking them up to realize this isn't going away, and that a lot of these crypto people have generated wealth and are starting to think about longer term tax planning, and we're not going anywhere. So I'm okay with that, because guess what? That means if I'm holding all these assets in my retirement account and these guys open it up for their 5, 7, 8 million users a pop, I mean, fine. I welcome it, because what that does to my retirement account is great, and for our users. So what they probably won't do is they probably haven't figured out how to enable you to own your own keys and stake and lend that stuff. So that's where we're gonna keep beating them, because we just know we grew up in the world of crypto. We know it, and we're here for like building the next generation's Vanguard, where it's like people that want to be able to lend out and hold your own keys. Like, that's miles apart from those guys, in their ivory towers at Vanguard and these other places.
Yeah, absolutely. I love that the different options that you present, and the name is rightfully so choice.
Good.
Yeah, I love that. And I'm sure they wouldn't be able to compete on that level, at least yet. It'll probably take them a while to get familiar with Bitcoin and private keys and all that.
Part of me hopes they do, and part of me hopes they don't. So
Right.
I can't really tell you which one I'm more. I probably hope they just give me a couple years at least.
For sure. So I want to ask you now, you may have mentioned, how many coins do you support, and is it the top, does it include the top 10, let's say, in the market right now?
Yeah, it's more than that. It's more than top 10. I would say I'd direct you to the website
Mm-hmm.
to play the trick. We're adding and changing all the time. The list grows. I think it's around the top 40. But don't that might not be an exact number right now. We've got a whole squad, a whole team that's in there every day doing diligence. And I'd say that we're not going to have the most, but we're not going to have the least.
Sure.
So I think there's a balance, especially for us as we're an old company, but we're really, since choice, we've really been a product company like this. So I'm watching what the bigger guys are doing, the Coinbases, the Krakens, and we're kind of watching that, and then we're watching what Binance is doing, and we're going to find that progressive balance, I would say, on the coins listed. But I'd be shocked if we don't really have that many coin requests anymore because the top big ones are all there.
Right, that makes sense, and it's I honestly don't think it's possible to have all 2,800 coins on the list.
Is that how many there is now? Is it like 2,800 now?
I think so, or probably more. Honestly, it's hard to keep a track of. Yeah, it's probably more. So I know I'm asking you, and then my next question is going to be hard to answer because there's you want to time things from a PR standpoint. But any hints to what we might expect from Kingdom or Choice by Kingdom Trust this year?
Well, I think I think the biggest. Here's what's really interesting. First, it's just going out. It's just the 7.1 million Americans. So that's a big enough for me to explain retirement accounts to all of our friends and people that have been in the industry. That's enough for me to really dive after for the next 2 years. But here's something that I'm particularly interested in. I have another little power team that's working on this. At Kingdom, we actually custody $22 billion of assets. Only about $1 billion or so, $1.5 billion maybe, depending on the volatility of the stuff, is in crypto.
Wow.
So we have 19 something billion of other stuff. Most of them are physical gold, silver, real estate funds, land. And what's fascinating is that there is like this really interesting intersection going on between those old analog legacy assets and where our industry is colliding with the world of alternative assets. And what a lot of these open source decentralized networks, how you can wrap tokens.
Yeah.
Tokenize is a word that's been around, overused, but still very real. And where these two things are colliding, we're putting a lot of R&D into. And I think it's very, I look around at the other CEOs and entrepreneurs that are in the industry, and there's not a lot of them that understands the space as well as I do, but also have $19 billion of assets underneath the umbrella.
Sure.
And I think that there are going to be some very cool things. I'm looking at how we can leverage Tezos for that 19 billion. I'm looking at how we can leverage, the commerce block technology, looking at how we can leverage a lot of these open source technology companies. There's a lot of interesting things you can do there. And I would say be on the lookout for us to make some big announcements on that later in the year. But right now, I'm focusing on telling Bitcoiners and anyone in crypto traders the importance of a qualified retirement account if you're a trader. It's a big deal.
Absolutely. And I hope the folks listening, there'll be links in the description. You can go check it out. I know I'm going to be checking out your services after this because I'm trying to avoid as many taxes as possible.
Same. Golly.
So I want to switch gears a bit and talk about Bitcoin and the market. Obviously, Bitcoin had a huge rally up to about 41,000 in a bit of a correction mode right now. We are certainly in a bull market. I want to get your take on it. You've been here for a long time, and where do you see us maybe at the end of the year, possibly a price prediction? Your overall thoughts on that.
Yeah. So the two biggest things that I look at, and the guys that I pay attention, gals that I pay attention to that are smarter than me look at, is that I don't hope this doesn't sound too technical, but I pay a lot of attention to the UTXO transaction, unspent transaction backlogs, and look at like the HODL rates of where the network dynamics are in terms of people that are hodling and longer term holders. And if you look right now, ahead of that move that we had from like 15 to 40, the hodl rates were incredible. We haven't seen unspent the UTXO transaction analysis was as good of a ratio as we've had in years. So you take that, and by the way, it's even better now. It's just as good now as it was then. You take that and you juxtapose it to the supply that you've got on exchange. All right. So it's a very similar analysis, because what most people do is you go to the liquidity venue, move coin off exchange, and then you look at the HODL rate, like the UTXO rate, and how long those coins are staying in those wallets. And the trend remains constant. You have coins leaving exchange, liquidity is drying up on exchange, and the UTXO balances are growing. So if you look at that, as we have more entrants still coming in, PayPal is just getting their feet under them in terms of this solution. I think PayPal is bigger than all the other stuff, like the treasuries of corporates and stuff like that. So I think what's most fascinating is the on-exchange liquidity is dry, and it's going to, I think, remain dry. And I think that the UTXO now ratios of unspent transactions is growing, which is couldn't be more bullish. So you know, this pullback from 40 to 28 or whatever it was, it's like, you know, welcome to the show if you're new.
Sure.
This is normal, and it will be volatile for a long time. For, you know, it would probably be very volatile for the rest of our lives. But right now, short-term price target, I think we'll revisit and blow past the 40. What did we get to? 41,000.
Yeah, 41.
I think we'll blow past that this year.
For sure. And it seems like a perfect storm is happening, because you got QE infinity and beyond, and obviously due to the pandemic, a lot more money printing happening. Yep. And now you have companies like MicroStrategy putting Bitcoin in their balance sheet. I'm interviewing Miami's mayor next week. He's talking about putting Bitcoin on the city's treasury. So the adoption is not just from retail and not just from hedge funds and some of the Wall Street guys, but just everybody trying to get a hedge against the inflation. Do you see this trend continuing, and what's your outlook, you know, given this? Not necessarily price action, but it seems like everybody's going to be scrambling to grab as much Bitcoin as they can.
Well, so my prediction is, and this sounds silly, but I think this is what's going on. Bitcoin is making Austrian economics sexy again. So for those that don't understand Austrian economics believes that at the roots of the financial system, right, the gold standard was the shining star for Austrian economics back in the golden age of the great European post-Renaissance era. Like that was like the shining moment for Austrian economics. It got outcompeted with coinage and paper, because a centralized issuer in an economy, gold was very not very divisible and very transferable, as much as paper and coinage was.
Sure.
So these centralized currencies outcompeted gold, therefore brought in the age of this Keynesian experiment of printing money. What's happening now in a digital age is Bitcoin we're in this like same European golden age that, by the way, is explained very well in the Bitcoin Standard. If you ever read that book. And if you haven't, I strongly recommend reading the Bitcoin Standard. But we're in this like digital Austrian Renaissance era where, just like the European Golden Age, we're in this like awakening of the importance of having a scarce money supply at the nucleus of our savings as a person participating in the economy. And that's so big. It's like a 5 to 10 generational gap type transfer. And I think that seeing MicroStrategies, seeing Square, seeing there's been a few others in London. There's been a few others that have done this. It's a part of this movement, just like we've been, and when the grassroots, like the ex-gold bugs, really got us here on the retail side. We're in this same kind of financial renaissance where I think this is just the beginning. This is why Guggenheim, a manager of $400 billion in assets, believes that Bitcoin is going to $400,000 per coin. That is literally their price target. And it's because of this financial Austrian digital renaissance that's going on. And you don't need everyone in every different market, but you've got, X% of corporate CFOs and treasurers that are looking at this going, yeah, okay, this makes sense to me. I also think the legacy system's effed up. I'll put X amount in there. You got the hedge funds, you have the institutions. Then you also now have, by the way, there's 26 trillion with a T dollars in US retirement savings. Bitcoin is less than 2.5 billion of that. So look at all of these categories in this, and I think, we're just getting started. I mean, it's what a time to be alive. And what's most important is that and the difference between now and 2017 is you don't have these corporate treasurers, these hedge fund guys, these institutions. They're not doing it to take a punt, or they are endorsing this thesis that I'm talking about. And what I think it's time. Here's one thing I'll say is that for 10 years, or since I've been in Bitcoin for 8 years, I've been listening to regulators talk about and tell us as entrepreneurs and CEOs and founders trying to advance this, scorn us on how dangerous Bitcoin is. Well, I've helped hundreds of thousands of people get into this space, and I am shocked at listening to central banks. I'm shocked that regulators aren't now starting to look at central banks and making them give deeper disclosures about the dangers of keeping cash in dollars. Right? There are material dangers for that if you're a retail investor. And I think that's not advice, but I think there should be pressures coming from both of that. Are central banks doing enough to inform populations about the mass inflationary situations going on with currencies? I saw a tweet by the International Bank of Settlements the other day that said, if digital currencies needs to be in existence, they should come and be issued by central banks, because only central banks have the ability to make them sound money. At what point do regulators look at that statement and compare it to the inflationary garbage that is actually going on in these paper currency markets and start to reprimand these statements?
Sure.
At what point? And the answer to that is when enough people realize what is going on and vote the regulators out and put the new ones in that see the madness that is happening. And, I think that will happen. And when that happens, that's when the tide changes. It's not that the US dollar is going away, but one of these is scarce and has a basis to it. The other one is infinitely printable and being debased constantly. And to say that when you have leaders in the banking and the central banking community saying that one of them is sound and the other one is not, that is unbalanced and that is dangerous to retail. So,
absolutely.
I think there's a reckoning coming in the next 10 years for people that are holding on to the legacy Keynesian system, and it should be loud.
And do you see the movement to move to digital currencies and CBDCs as the central banks are trying to build right now? It's almost like they're trying to build their own Bitcoin, so to speak, but we know that they can still keep printing even if it's in a digital format. And obviously, I think it's clear that the disruption that Bitcoin caused is why they're creating the CBDCs, using the blockchain tech to put the money in a more digital tokenized format.
I think this is going to get really technical for a minute, but I think it's all. It's got a shelf life. I think if you wrote a book about our industry, a 100-year book, which we're in the first 10th of that, right? 10-year-old industry, basically. There's a chapter in there that will be the age of the central bank digital currency. And it will be a very short chapter. It will happen. I think that there are, the stable coin market and these digital fiat currencies are an integral part of our system right now. I'm grateful for them. There'll be a chapter where those will have national competitors to them. But at the end of the day, they're debt-based money. And the issue with debt-based money is it will carry an interest rate. And the interest rates can either be positive or negative. And most of these debt-based monies are now carrying a negative interest rate. So if you're a user of a digital currency and you're being charged every day to use a currency as opposed to saving a currency and seeing the value of it increase, which one are you going to choose? You're going to choose the one that's scarce and that's increasing in value, not the one where you're being charged an interest rate to hold it, a negative interest rate. So if central banks decide to issue like an equity coin where there is no underlying negative interest rate associated with it, that could be interesting. I don't know how they secure it without, maybe it's some type of proof of stake kind of node-based system. Certainly couldn't be proof of work. There's like an immaculate conception of Bitcoin that enabled it to be anti-fragile out of the gate the first 4 years. So I don't know. I think it's a chapter. We'll see it. I don't want to own debt-based money. In a world where you can endlessly print it, it's not a good place to be. So we'll see. It will be a chapter for sure, though.
Sure. I want to talk about Bitcoin mining in the United States, and I've talked a lot about this on the channel. Where personally, I see like a global macroeconomic battle for the control of the hash rate of Bitcoin because it's on the rise. It's hard money. It's capped, and we see a lot of mining, of course, or mining pools in China, but there's a lot popping up here in the United States. The world's largest being built in Texas, and just many different folks getting involved now. Are you seeing, from your perspective and the circles that you're moving in, what's the dialogue? What are you seeing on your end?
I think what we need, so now we're a Kentucky-based company. With the state of Kentucky is issuing grants for Bitcoin miners right now, literally at the state level. It's unbelievable. And I think that you're starting to see, I think your next guest next week is a person that works in office, and he or she is now exploring the idea of owning Bitcoin as a treasury, back to that economic thesis. Now, once you start doing the math about state income taxes on miners, and if you look at the size of the mining industry right now in terms of revenue, as Bitcoin's price goes up and as the associated reward value goes up with the value of the coinage, like the Coinbase increasing, a lot of state revenue opportunities for a big industry. So what I think is happening, and you see this, Texas is a good example. There's this balance between promoting clean energy and Bitcoin mining that, in fact, Bitcoin mining is going to advance clean energy development in states and also advance local state tax revenue. And the governors and the treasurers of these states are starting to figure this out. They're starting to realize, like we see in Texas, like we see in Washington and Kentucky and others, yes, a lot of it's in China now, but we are very capitalist. We are very smart here in the United States. For every 1 year of recession in our history, we've had 3 years of economic growth, right? And we're now awakening to what this is. And I think that will seep its way into the policymakers' really game plans of what they're going to do and how they're going to increase state tax revenue. And what a way to do it, where you can A, promote clean energy, and B, increase your state's footprint right then and there from a revenue standpoint, given most states, not most, but quite a few are in a negative balance situation going on right now.
Oh yeah, and even just coming out of this pandemic situation, it's even worse. So I'm sure I'm excited to see how these different states start adopting and pushing for Bitcoin mining and that industry to grow.
Yeah. And I'm a big believer. I think you look at Bitcoin mining, it is migrating towards clean energy. And CoinShares, my last company, the research, Chris Bendixson there did some amazing work. So did Nick Carter, by the way, on Bitcoin mining. And it's migrating towards clean. And I think that states need to jump in front of that. It's not just about adding, and I think this would be a great, I'll listen to your next week's one. I think this is a great topic to bring up because yes, treasury is important and safeguarding the savings of the state, but also investing in recurring revenue, which we're talking about what mining really is. It's the supply side of Bitcoin. And if Bitcoin is one of the most, is one of the fastest growing networks in the world, look at how many state and federal farming grants and programs that exist for that. Right. I think Bitcoin mining, which is basically the same thing, it's like farming for Bitcoin, will follow suit, and you'll see states that get that sort of promote these miners to come in, clean energy be promoted, and it'll help the grid and help the tax situation in the state.
Sure, sure. I'm excited to see that roll out in the United States. I think long overdue, but it's getting there.
Yeah.
So I certainly am invested in Bitcoin. I believe in Bitcoin. But for folks who are new to the market, they may be encountering, and we've seen a lot of it lately, a lot of FUD, a lot of people highlighting, but here's the risk, right? Tether and quantum computing and all of that. What would you say to address the Tether concern and the quantum computing concern?
I think, first of all, quantum computing. We already have quantum computing versions that of SHA-256, the evolutions of that we believe that we're prepared for when that day comes.
Sure.
There's been a lot of work put into that. But if quantum computing comes, Bitcoin is also, a financial asset is one of the least concerned things. Our nuclear codes are, everything else is just, oh my gosh. So that is out there. I think it's, everything, the stock market, everything is kind of in that bucket of how quantum computing is going to be affected. If you study, we've got some really good prime factoring and quantum resistance versions of SHA-256 or advancements of that rather that are ready. Now back, from Tether's perspective, Tether and Bitfinex and Tether users are still, relatively speaking, a pretty small percentage of the total market cap of Bitcoin. And you're talking about $1 trillion industry here. And I think that Tether, it will grow up. Look, I mean, same thing in the early days of Bitcoin. What the story was, well, what about these exchanges? They're unregulated, and if these exchanges go down, all of Bitcoin goes down. Well, guess what? Tether is a stable coin. There are how many more now? I can't even keep count. There's like 20, 30, and Tether is a successful stable coin. It probably will not be the most successful in 20 years. Just like Mt. Gox was a successful crypto exchange, not even in business anymore.
Yeah.
It's a very small part of what's going on. And it may have, from time to time, a bit of impact in daily liquidity that exists. And I just say, do your research, know about it. It exists, just like Mt. Gox existed. But structurally, there's much more going on than just that. You've got regulated counterparties, Fidelity Digital Assets involved, Nomura, the biggest Japanese investment bank, involved. You got CME Futures. You have Ray Dalio today, the largest hedge fund in the world, coming out and endorsing it. You've got Stanley Druckenmiller, Paul Tudor Jones. All of these famous macro people are endorsing it and participating in regulated ways. They're not out there in Southeast Asia or in wherever, but buying Tether to buy Bitcoin. They're going through regulated funnels, buying it in regulated capacities and storing it with regulated counterparties. That is what is going. That is our industry now. There's other stuff to pay attention to, but look at it holistically is what I would say.
Well put. Well put. I want to talk a bit about some other items in the crypto market, and if you could shed some light or give your thoughts. We got the Ripple SEC lawsuit going on over XRP, and while it may be very focused on XRP right now, I think it will help determine how other digital assets and crypto in the market will be treated. What are your thoughts on the entire situation and what the SEC did, and Jay Clayton specifically?
I'll be honest, I'm still digesting it. I think that a lot of us, I'm still trying to get all of the facts. I would say that there were a lot of warnings that the SEC gave the foundation in regards to its involvement with XRP. I think that they were doubling down on their stance. They clearly, at some point, the conversations between the SEC and Ripple must have just broken down. And it was really a shot fired by Clayton on his way out that quite frankly, was a pretty big short-term blow.
Yeah.
What's been fascinating about it is to see quite frankly, I've been surprised at how resilient the price action has been on it.
Yeah.
Now, we have gradually seen, as you know, we've gradually seen exchanges delist it, but not everyone is.
Right.
And it will be fascinating to me. It is a big market cap. It'll be fascinating to me how and if it makes this transition. And for that matter, I do think there are a lot of other. The question is, and is a set of precedent for some of the other peripheral coins. What we do know, especially if you're new and you don't know this, is that the SEC has come out and definitively said that Bitcoin is not a security. At least we know that.
Right.
Right. So then it's important to study what their position was with XRP, and it was less about XRP than it was the market behavior of the foundation in relation to XRP. That is very different. And I think it's a similar, in some ways, it's a very similar conversation to other service providers that exist around these assets that are difficult to put our finger on. Service providers need to always be regulated. They need, that if you're handling people's money, it's a good idea to have regulation. Sure. You want, as a customer, that to happen. I think that in some instances, it does kind of make you question some of the other coins. Will there be others that kind of follow that suit? But in the other instance, if you have your money with regulated entities, you're participating through that, it gives you a lot more protection in that way. The jury's still out. I mean, it's interesting. If you would have asked me when I saw that headline, what would the price of XRP be by end of January, I would not have expected it to be where it is right now. As it comes for us, we custody a couple $1 billion of securities and a billion or so of crypto. So we're looking at what we don't care whether assets are securities or not, because we're a regulated qualified custodian. We custody it all.
Sure.
So just like I'm excited about seeing these other security tokens come out that we'll be custodying and participating in too.
Got it. Yeah.
I don't have on this topic. There isn't like
right.
I think anyone that has this like amazing answer to it, I'd be a little suspicious of it. I mean, it is a little bit of a cluster F, and I think that there's good views on it, but all in all, I don't want to sound. I think it's healthy to say I'm not sure what's going to happen. It's okay to say that.
Right. Absolutely. It's a very complex situation, and there's a lot of moving parts and components because it's with Chris Larson and Brad Garlinghouse, but also Ripple at one point, and so we just got to kind of sit back and watch and wait and see what happens. I also want to get your thoughts on Ethereum and decentralized finance, and where do you see that movement of DeFi?
I think it's booming. I think it will continue to boom. I think that we need, specifically for Ethereum, the most important thing that we see is how it migrates from Ethereum to Ethereum 2.0. And I think that right now a lot of the market is anticipating a successful transition. The DeFi market is fascinating. I mean, what I think is the most fascinating part about DeFi is that this goes back to the earlier point we were making. Everyone is so blown away that interest rates are as good as they are in crypto. And everyone's pointing over here and saying, well, something must be wrong with that. Well, that's not the case. Look, 20 years ago, mortgages were like 15 to 17% a year. We had interest. What happens, because in our world, the nucleus of our world is Bitcoin, which is a stable, systematic supply. And what's happening now in crypto, for most of it, and some's not, but you have these like natural lending rates and commercial rates that are and network rates that are starting to emerge. These are called commercial natural interest rates. And when you don't manipulate the short end of a yield curve or of an interest rate curve like the central banks are doing in the legacy system, what happens is you have healthy, reasonable interest rates. The reason why your mortgage right now is so low is because there's decades of yield curve manipulation by the central banks. What's happening in crypto is you have natural market-based interest rates. Therefore, they are higher. They're probably a little riskier, so therefore they are higher. You are getting paid more. It's a beautiful thing. And I think that this concept of yielding, earning, staking, baking, putting your Bitcoin in motion, even though you don't stake Bitcoin or anything like that, but you can lend it and earn a high interest rate on it.
Yep.
This is big, and it is a very it's a very positive thing for our network, not a negative thing. There will be moments, just like in the ICO days, where you have some of these coins that are getting over their skis.
Yeah.
Do your own research. A lot of them, in my opinion, some of them are right now over their skis, and then you have a lot that aren't. I mean, I know that the Bitcoin interest rate market with regulated investment grade balance sheets, you can get 7 to 15% a year on your coin. And in the DeFi world, it's the same thing. The returns on some of these staking and baking are great, and it's because of the nucleus you have this Austrian basis of sound money and commercial interest rates.
Absolutely. Now I want to switch gears here for the final question, and it's the hot topic at hand, and that is the GameStop short squeeze, Robinhood, Wall Street bets, and the little guy winning, and hedge funds taking losses. And I want to get your take on it because I have my personal opinions, but we'd love to hear what you have to say about it.
It's what we're talking about 24 to 48 hours old news here. It's like hot off the take here. I think that in some ways this is positive. In other ways, it's jolting when you think about this retail grassroots movement that a lot of them are behind Bitcoin too.
Right.
Just gotta realize how fragile the legacy system is. What happened? Robinhood, as a broker, routes their order flow through these other institutions, and there's these, like, the legacy system is centralized through these institutions. And when these institutions say no, there's we over here are kind of like stuck. And like this morning when they halted new buy orders for those two stocks, or I think it was 3 stocks actually.
Yeah.
It was a jolt. It's a wake up call for all of us, and to realize that, wait a second here. I mean, we obey, basically, like you obey us, fall in line, and I think that there's going to be a reckoning out of this. I think you're going to see the Financial Services Committee all over this. And in some ways, I don't think Robinhood handled like the comms well enough, because a lot of it wasn't Robinhood's fault. It was the institutional counterparties that they're getting liquidity from that
right.
that saw the behavior downfield and said, we don't like that. And these two groups are at ends with each other. And a little bit of that is also in this Bitcoin fight. It's very analogous to that, because you got this grassroots. All of these Wall Street people are so mad about Tesla going up, and they're so angry about some of these overvalued stocks in their bucket of like price to earnings and discounted cash flow. But then you have this group of people that say this is the direction we are going, whether you're involved or not. And those two groups are at ends with each other. So the Citadels and all of these big institutions, they're like the intermediary that some of these platforms are using. And now it's really like, wait a second, what's happening? Which makes the world of like DeFi, decentralized execution, all of these other things, that's in our world over here. That's going to get more and more and more popular over the next 10 years, especially as you see these guys sitting in their ivory towers, shutting off trading for the people that are using these platforms like ours, Choice and Robinhood and others. We are going to win. At the end of the day, we're like, this voice of our generation of trading isn't going anywhere. It's okay that you're mad that Tesla's going to the moon. We don't really care. Go do your price to earnings ratios over there and play in your little box and your negative interest rates and and all of your dollars and all of that stuff. Go have fun. We're over here. And I think the regulators are going to see what's going on. And we, in some ways, retail won. In other ways, we didn't. In other ways, we got a jolting to realize how fragile some of the systems are.
I think you put it very well, and you mentioned it's analogous of what's happening in the decentralization of finance and Bitcoin itself, right? The core mission, why it was birthed or the idea came about of the 2008 crash and the bailout of the banks. And I think we're seeing again the system itself is trying to screw the little guys. The little guys, they don't want them to win at all.
Right.
Yeah, absolutely.
And I think And they're, the people, we're talking about the people, not, the institutions have had their monopolies and had their stuff for too long, and we're sick of it. And Bitcoin will continue to emerge as that is the flag bearer of that movement. The Occupy Wall Street movement now has like a products to sell, if you will. I mean, it's got a solution. I mean, one of the issues back in 2012 and 2011, no one knew Bitcoin and the Occupy Wall Street movement back then. I would put myself probably a little bit more in the Occupy camp than not. Mm-hmm. And the issue with it is that we were mad, but weren't providing a solution.
Right.
Guess what? Now we've got a solution. And it's a nucleus of Bitcoin along with all the other ecosystem that we're bringing with it.
Absolutely. Ryan, I want to end with some rapid fire questions, such as, what's your favorite food?
My favorite food, lasagna. Not even close.
What's your favorite musician or band?
I would say the Grateful Dead, tied between the Grateful Dead and the Allman Brothers.
Nice. What's your favorite movie?
I'm also a Biggie fan.
Oh, awesome. What's your favorite movie?
Harry Potter. Deathly Hallows.
Nice. What's your favorite book?
Harry Potter. And the Bible from my mom and dad.
Finally, when you're not working at Kingdom Trust or looking at Bitcoin, what are you doing for fun? I actually like golfing a lot, but I'm also a big student of physics and of CRISPR and of like the gene editing the technologies that are existing. I think those two things, I think the world of physics and the world of gene editing are going to be equally as disruptive as Bitcoin is. And I'm investing in those areas and looking at other businesses there too. Very cool. Ryan, thank you so much for joining us today. Wish you best of luck with your endeavors, and thank you for sharing the knowledge around the fact that we can trade tax deferred, and I need to go check this out ASAP. Everyone, links will be in the description, but thank you again, Ryan.
Hey, likewise, I appreciate it, and hopefully look forward to watching next week's too that you have on, and appreciate the time.
Awesome.